Coming up on the program, South Africa's Ramaphosa pledges to fix economy as election looms. Egypt to auction $1 billion in one-year dollar treasury bills on Monday. Plus, we will be looking at how growth in cannabis investment has taken away capital in mining in Africa as cannabis stocks deliver better short-term returns. Thank you for joining us and welcome to Business Incorporated. I'm Chimezie Obi Iwagu. First, we begin with the markets. And the Nigerian stock market remains bullish even as the mostly feared election day draws closer. At intraday, the NSE index was up 1.20%. The South Africa's JSE index fell 0.75% a day after President Ramaphosa promises to revive the economy in his State of the Nation address. The market in Egypt is closed today and Kenya was in the positive on Thursday. In the Middle East, the last trading for the week was on Thursday. Qatar's stock market fell sharply as all but one of its stocks slid, while all major Gulf bourses also tumbled, mostly pressured by financial shares. Qatar's index fell 1.67%, with 19 of its 20 stocks declining. The Abu Dhabi index also came down 0.60%, led by a 10% slump in Waha Capital. In Dubai, the index lost 0.56%, with all its real estate stocks dropping, while Saudi's index was down 0.24%. And stocks in Europe hovered around the flat line in early trade on Friday as trade fears returned. Well, Paul Christian Brace, my colleague at the Frankfurt Stock Exchange, now brings us update of what's happening in the European space. Good afternoon, Paul.
Good afternoon.
Well, the global stock market is down for the third straight day today and, of course, set for first weekly loss in 7. What major issues are weighing on investors' mind as we head into the weekend?
A lot of things are weighing on their minds, especially two men fighting over economic power and of the economic power in the world, really, and apparently unable to settle their differences. Of course, I'm talking about U.S. President Donald Trump and China's Xi Jinping, who have again pretty much destroyed any hope that investors had for a settlement. Donald Trump just said he is unlikely to meet his counterpart before the March 1 deadline, when tariffs are going to go up for Chinese products coming into the U.S. This is $200 billion worth of products. Tariffs will go up from 10 to 25%. And that's certainly going to have an effect on businesses. It already has, and we've seen that in part in the earnings season that's been going on, that a lot of investors have been watching this week, and most of them were sort of disappointing. We've seen tech stocks, Alphabet, Spotify, and Twitter report this week, and that didn't spark too much excitement. The car sector, devastating, with Toyota, Daimler, and today Tata, who lost over 30% in its share price. It's also extending to the travel sector. We saw Expedia and TUI doing really bad, also with a lot of volatility in their shares. And next week, things are probably not going to get any better with Nvidia, the chip maker, and others reporting we're likely to see more impact of the global slowdown. Growth in Europe is another issue on investors' minds. It is slowing down, and the EU has just cut its forecast, and we have not moved in terms of Brexit. Brexit is still looming. It's less than 50 days now, and there still doesn't seem to be a solution. The EU doesn't want to budge, neither does Theresa May, and so that also weighs on investors' minds.
Sure, let's look at the M&A market, but this time across the Atlantic. Consolidation in the U.S. banking sector has been on hold for 10 years. Now the BB&T and SunTrust merger has upped the ante for U.S. competition. Is Europe watching this closely and what it might mean for its own banking space?
Well, certainly, this is the biggest banking deal since the financial crisis, and so of course the banking world in Europe takes note of that as well. Interesting is why are they merging? Well, one, of course, bigger means better competition. It's also supposed to save a lot of costs, and the two banks want to use this new power to innovate in a digital environment. Of course, that resonates with the rest of the banking sector, who's also trying to achieve just that. Interesting also, the U.S. banking system and U.S. banks are doing pretty good still in comparison with what is going on in Europe, where talks of mergers have come up time and again, especially with Deutsche Bank in Germany. There's been talks about UBS taking over or BNP, but and Germany's second biggest lender, Commerzbank, but the merger hasn't happened, and there's no definite sign of one either. And that's, although the sector is not doing very well here, neither is the banking in France, by the way, where it used to be a big party, especially in investment banking, when everywhere else banking wasn't doing great. Now we've just gotten reports from BNP, who lowered its guidance this week, and also from Société Générale. The two French banks lost profits and have lowered their guidance for the future. So the big party in investment banking is over, and that, of course, increases the pressure on these banks to consolidate within Europe.
All right, Paul, the final one, let's make it a bit snappy. It's on data. Germany's Federal Statistical Office today reports the country's exports increased 1.5%, that's in December, while imports also rose 1.2%. What do these numbers mean for the largest and strongest economy in Europe, in line with recent string of other weak economic data?
Yeah, the overall 2018 was kind of a surprise because it was really a record export year, and you'd wonder, you know, in this environment of the trade conflict and Brexit, how is that possible? It's possible because the first half of the year was really, really great, and then things slowed down significantly, with November being particularly worse. Imports did grow faster over the course of the year, which means that Germany is slowly getting rid of some of its trade surplus, which has drawn criticism from its trading partners, particularly the U.S. In the outlook, though, for 2019, things aren't looking very great. The EU and the German Chamber of Commerce have revised down their forecasts for Germany. That includes exports and manufacturing. They've lowered them down to somewhere around 1.1% of growth. And that, ironically, doesn't even include Brexit. This is assuming that there won't be any effect on trade by an exit from the UK.
All right, thank you very much, Paul. It's been a wonderful week with you. I look forward to talking to Orange next week. In the meantime, enjoy the weekend.